What's up, YouTube? It's Friday, so that means it's time for this week's installment of the 52-week challenge. This is where I tell you all of the fractional real estate that I bought this week. It's intended to be something that we discuss, right? You can jump in the Discord and talk about it, jump in the comments. A lot of people like to send me DMs. Any of that stuff is fine. At the end of this video, I'll link to the playlist. If you watch the very first video in this series, I explain like what my thought process was before, behind starting this, if you haven't already watched that. Before I forget, please like and subscribe. In the description to this video, I have a link to the Discord that I mentioned. We talk about lots of different fractional real estate sites. It's been pretty active lately. A lot of helpful people sharing their thoughts on all different platforms, different properties, that sort of thing. There's also links to every place where I currently invest in fractional real estate online in the description to this video. That's where you'll see those links. Please feel free to use those. Some of them give you free money. Some of them say they do and they don't really. Some of them just don't, but I just give you the link anyway so you can see everywhere. Do your own due diligence on all of those platforms and any of the properties that you see me buy. Just because I'm buying it doesn't mean it's a good deal. In fact, some of them are actually not going to be good deals, right? And so you want to do your own due diligence and figure out, is it something that is, the right risk, the right, time horizon, all that sort of stuff for you, right? Because it might be different than what I think. Anyway, let's jump into it. First thing I bought on 3 DACs on Saul's Lot, 3 of the same one, right? I just picked up a couple of these, already sold out. If you don't know this platform, because, I don't talk about it quite as much, there is a playlist for it. I did a video where I looked at this one earlier this week. But yeah, this is, it's a property. It's already under contract in the real world to sell. So this should be a pretty quick flip. As long as that happens, even though it's a lower profit percent than usual, it'll be a fantastic, fantastic annualized return if everything goes as planned. So picked up a little bit of that one. In general, this has been a platform where I've just been buying a little bit of every single one. Of course, I do due diligence on them, but so far haven't found one that I thought strongly enough not to buy. Because of the business model, because of the way it's set up, it's not the same as a lot of the other platforms, and so that's how I approach this one. Not saying that's the right way to do it, but especially where they have very little volume at the moment. I've just been trying to roll my money over in there as often as possible. Next one, I did quite a bit of buying on Lofty this week. I put out a video a couple of days ago about how I am buying a little bit more on there now again, and explaining what my thought process was and why. Almost everything that I think really everything I bought on there was based in, had something to do with valuation, right? So Winkler, I bought in either high 8s or low 9s price point. If you look at, by any reasonable metric, it seems like it's gonna be really hard to lose money buying it at this price point, and I think there's a lot of upside, right? So I'm always talking about risk-adjusted return. Well, having that wide margin of error by buying very cheaply reduces risk, and it also leaves a lot more room to get a return. And so that's what I really like about when you get those deep discounts. It's obviously a discount isn't the only way to lower risk, right? There's other aspects of this property that make it very risky. The market, the fact that there's something going on with the foundation, there's the fact that all the Lofty properties, or the vast majority of them, have a lot of unknowns that tend to pop up at inopportune times, right? There might be debt on this property that we don't know about. Maybe we owe a property manager something. Who knows? But at the moment, there's just such a huge delta between what I think this property is worth in real life and what we have to pay per token, that this was sort of a no-brainer. This is actually a property that I've been in and out of 3 times already. Maybe even more than that, but 3 times in the last couple of weeks where I bought it, sold it, because the price has been fluctuating wildly. I think now that the Oracle has reset at a much lower price, very close to the market price, that's not, it's not going to be an opportunity anymore. But it does mean that we can start to pick these up without moving the price quite a bit. So, obviously, if it's a deal that you think is interesting, which I do at that price point. Nash, this is another one on Lofty, and it's very, very similar story. Not quite so cheap, but I also think there's, it's also another one that I think there's a very, very wide margin of error. And so, same basic story. This is one I haven't been invested in as often, but I have bought and sold it a little bit in the past, I believe. The next one, this is a really interesting one. This is the Umland Circle. It is a really high-end short-term rental in Jenner, California. When I did the initial due diligence video on this, when it came out, it was at $50. I even said right in the video, if this ever gets to around $25, I'll probably be a buyer. Well, I got to $25. It took less than a year, actually about 7 months from that point. This one, it's interesting because it is, there were people trying to do like peer-to-peer trades using the limit orders. So they'd basically just go put a $1 limit order up, and the other person would buy it right away, trying to send tokens back and forth, and didn't really think about that would affect the Oracle price. And so when the Oracle's reset, the price of this property tanked. So I don't think. I mean, obviously, I did say in the past that, I'd wait till it was around $25. I think that's a price that makes sense for me as an investor on this property. I don't think the market price for this would have gotten here anytime soon without those trades happening, though. There's not a whole lot there hadn't been a whole lot of trading in this. It had been a pretty narrow range. The low end, it had been down to $42 maybe was the low. 41 right there was the lowest price, and all of a sudden, I mean, we just it dropped right down. But it I think due almost entirely to those trades that got picked up in the Oracle price. So whenever you're trying to do something creative, you have to think about, are there some unintended consequences here, right? They were trying to do that deal so that those trades would be recorded by Lofty, because when you do peer-to-peer trades and then ask Lofty to record that, sometimes it can take them months to do it, and it's understandable because they're not getting paid for that activity. But so they came up with a clever way around it, and it just didn't see this as being something that could happen as a result. But yeah, so I expect this price to move back up sometime in the near future, and this is just a trade for me. I don't necessarily love this property long term. I think at this price point it makes perfect sense. But if you watch the due diligence video I did on it, there's a lot of risk in this. It is there's not some other exit strategy, right? It's either you sell it or you use it as a vacation rental. It's a tiny little town. It's a expensive property. There is debt on it that I don't think that the property income can actually cover. There's a lot of reasons that I wouldn't buy this normally, but I expect, this is one that I just believe that it'll be a short-term, and it's already moved up a little bit, but I think it'll be a short-term dip because it really had nothing to do with the market fundamentals on here. I also bought some tokens in the Universal Lending DAO. I did a video earlier this week, just about Lofty in general and some of the things that have changed my mind. The Universal Lending DAO is one of the things that they did. All of a sudden, it goes from having no cash in it to $34,000 in cash. Some of that is money that Lofty kicked in because they had made a mistake. Some of it is just money that apparently was there, but they didn't know was there because the accounting was off. That's the sort of stuff that really worries me about Lofty. But in this case, there were limit orders out for like $27.50. If you look at the $34,000 divided by outstanding tokens, I think it's like almost $15 per token, cash value. And so then we were getting another, I think it's another $70-something thousand worth of loans, for the remainder, which was like $12.50, right? If you look at it, the math that way. So this was just a real no-brainer as far as I'm concerned. Even if half of those loans are bad, that $27.50 purchase price made a ton of sense once we knew there's all this cash in there that hadn't, that they were. I mean, we were told by Lofty the ULD is out of cash, right? We sent in votes to try to borrow from it, and they said, "Oh no, there's no cash." Well, okay, there actually was cash, right? So, now that's been updated, and so that was an easy purchase for me. I think there's still a long way to go before it's worked itself out, and we actually, make money on the ones that I bought closer to 50. But I think that at $27.50, it made a lot of sense to me. All right, let's see what else. More debt. So I bought just a couple. Let's see, 1, 2, 3, 4, 5 LROs on ground floor. All of that was just reinvestment from payoffs. I did want to mention too, on Lofty, I'm not putting any new money on there. I actually took some cash off the platform this week. Everything that you see me buying, it's because I've sold out of something else, or I've accumulated rent, or trading or staking rewards or something. I'm not funding more money onto that platform, because of a lot of the issues that I've mentioned about it. Right, I'm going to slow down my liquidation, but I don't plan to put new money on there. In the same way, I haven't been putting new money on ground floor for a little while, because of the artificial payout that they did quite a while back. I've talked a lot about that. If you haven't seen that, you can look at the ground floor playlist and you'll see what I'm talking about. But I've got just from payoffs and buying new LROs, I'm up to 104. So it does seem like I'm going to be able to get to a pretty good level of diversification just using the auto investor strategy that I'm using on here. We'll see what happens. I'm going to just let this ride for a while, make sure something like that doesn't happen again. And then as long as it doesn't, this is one that I will eventually put a decent amount of money on, provided that it performs the way that it has since that, not, we don't have a repeat of what happened then, because I took a bunch of money, or not a bunch of money, but I took a third of the money I had on the platform off because there was no way to reinvest it because they did this artificial payoff, and then they had basically no volume of new investing, and so I was kind of just stuck, unless I wanted to be in their flywheel portfolio or their notes, and those are not the assets for me. That's everything that I bought. I didn't actually buy anything on Mogul yet this week. I had planned to buy the Swift when dividends came out yesterday. I didn't pull the trigger on it. My short-term rentals on Mogul had a bad month. It's going to happen, and even some of my pad splits didn't do as well. Some of them did fantastic, but overall, my dividends were down quite a bit. I did a video about that yesterday. It's making me think about, okay, do I want to slow down a little bit on there? I have been really, really bullish on the platform, and I still am. Especially short-term rentals, you're going to have ups and downs. But are we going to have more downs moving into what might be a recession coming up? That's has been worrying me about the short-term rentals for a while. So I don't know. I still might pick up some of the Swift. That's the only one that's available right now that I had decided I really wanted. I never did, give an answer on whether or not I'd invest in the Alcaraz. Somebody had a good point in that, in a recession, the really high-end stuff sometimes isn't hurt as much as sort of the stuff in the middle, because really rich people are, they're going to have money no matter what. And that's sort of a reason. I think this was Ike mentioning this in the Discord. It's sort of a reason to want to invest in that right now, because it is, just this really ultra luxury high-end property. So I don't know. It's got me thinking about that a little bit. overall, all of these platforms, right? It's still just an experiment. The longest I've been on any of them is for about a year. Most of them, it's been less. I think I bought my first piece of a mogul property in December. Now I've got 14 properties on mogul. I think that's enough for me to really get a sense of how things are going. Now, because I like it so much, I will keep putting money on here, especially when deals come up that I just think are, no-brainers. Like I said, I still might buy a piece of the Swift. It just gave me a little bit of hesitation yesterday, particularly with the short-term rentals. I mean, overall, my pad splits are doing really well on there, even though there were a couple that were struggling. But yeah, so didn't buy any of that this week. Right, and the Gilmore, I don't think I bought the Gilmore this week. I think that was the week before when I bought that, the second, because I bought a little bit more of it. It's everything I bought this week. As far as fractional real estate goes, what'd you buy? Feel free to jump in the comments, share what you bought there. In the Discord, I know most people like to DM me because I guess, a lot of people just want to keep it private, and that's perfectly fine too. My real hope for this community is that we're just sharing ideas, sharing thoughts, motivating each other, to be the best investors that we can, right? We're not just YOLOing into things. We're really trying to, be methodical and thought out, and hopefully it helps us all get better returns. Only time will tell if that's true. But yeah, that's it. Until next time, I'm going to just keep making mistakes so that you don't have to.